Welcome to Markets Now. I'm Michelle Rook with John Heinberg of Total Farm Marketing. Kind of some mixed trade in the grains and livestock futures here today. And John, let's talk first of all about soybeans. Kind of a good recovery after some early pressure today. And we got some help from the soybean oil market, it looks like.
Yeah, we did. I think that soybean market have actually performed very nicely today after yesterday's strong gains after the USDA report. Really in terms of the numbers that were put out there, in terms of wiggle room, that bean market is probably the tighter of the two. In that regard, I think that's what brought some optimism in, plus throwing the U.S.-Chinese trade issues and getting maybe a little bit softer and less concerning definitely helped that market get some footing. Add in today, continued friendly news regarding bean oil and biodiesel. Possibility 45Z gets extended out to 2031 as a proposal that's out there. Those are things that have really helped that bean oil market, now making new highs for the move here this afternoon, up $1.50 plus a pound on the terms of the board price today. So those are things that just help fuel that bean market here, which right now all of a sudden starts to look a little bit friendly on the charts. And maybe we see a little bit of money flow into that bean market because we've seen it in the past where a strong oil market can pull that bean price even higher.
Okay, on Monday, though, we did not get above resistance, that 1075 area on the July. Will we get above that, especially with this idea that maybe we're losing a few acres and are not going to see as big of a crop as we thought?
Yeah, I think that's a possibility here, at least on the old crop side. We did get through some pretty key barriers, a 200-day moving average out there on new crop beans. This market, I think, is building in some thoughts and that, we're going to have more corn acres than the USDA is thinking right now from the March intentions and less bean acres. So you start throwing less bean acres, taking off a few bushels for trend line yield, maybe for some potential weather. All of a sudden that bean market gets very, very tight. So I think that's some of the risk premium we're starting to build into this market. And then we need that going forward here. In other words, maybe get that target out there to that $11 mark on July, maybe get up there as well, even on the November, which is a spot where sellers should be stepping in place.
The disappointing market has been corn, new lows for the move in July before it kind of bounced off that level. But is the idea that we just have too much ample supply here from Brazil and a big crop coming from the U.S. still weighing on the market?
Yeah, it's a combination of things that are kind of really hitting home here in terms of that corn market, especially the old crop market. Demand continues to be very good. We saw that with the demand adjustment yesterday, bringing carryover to just over 1.4 billion. Maybe that number even has to come down further. We'll see. I think the next couple of weeks of export sales will be very key in terms of that happening if we can continue to see that strong demand. But added to the fact we've seen a bump yesterday, USDA raised Brazil's production up 4 million metric tons. We had a little bit heavier than anticipated wheat supplies. This market just seems very, very comfortable with the front end supply of corn here. And obviously with May expiration here tomorrow as well, I think that's a factor just driving this price down. I did like the fact we kind of held that 440 area today in the July as well as the December. So maybe we can get some footing here, but I think it might take us a couple more days here, maybe a little bit of positive news on the demand front to help us out.
Well, the fast planting pace that we saw certainly didn't help alleviate any of the fears about this big crop, did it?
No, it doesn't. And that's another factor that's coming into play now that we're well ahead of schedule in terms of the planting pace. Now maybe we're anticipating getting some of those earlier bushels or those early harvest bushels even earlier, maybe weighing into that September price a little bit more to the point where maybe end users are, like I said, feeling very comfortable right now where the supplies are. So there's just no buyers in the marketplace here at this time frame. It'll probably take some weather of some form, which looks very friendly right now for crop production with decent moisture being forecast here over the next week or so. But then we got to see what those June, July forecasts. There's still some longer term trends for a warmer, drier summer that could come into play because we start taking some yield off that 181 number off the USDA totals for the 25-26 marketing year. All of a sudden that supply at 1.8 billion can get tight pretty quickly.
Yeah, and 181 seems kind of high at this point, doesn't it?
I would say the market's pretty content to say that number is not gonna happen. But the expectation of more acres, as well as some of those demand components on that USDA report on Monday are questionable. The extra 150 million in terms of feed usage and residual usage is one that popped into my head. given the cattle and hog supplies out there. That's a number that they can wiggle around some demand very quickly and keep that carryout number around that 1.8 or even increase it if we have, still ample production.
So the wheat market has been an anchor on corn. We had new contract lows in all three classes today before bouncing. But do you think that market is trying to put a bottom in?
I would sure hope it feels like it is here, with the move today. We broke the new contract lows, pretty aggressive selling on the overnight session into the first part of the session today. And then we just seemed to find a little footing and turn that market back positive. So we got a little bit of a technical reversal on those wheat charts. Maybe this is driven by some of the news out there. We got the Kansas wheat tour going. There's some chatter about some possible disease issues that could really limit that crop a little in terms of its final production as some of those stresses are showing up. So we'll have to see how some of those numbers come out here. And again, U.S. wheat is still fairly competitive on the global scale at these price levels. So maybe we can see a little bit of demand kick, which would be nice. Obviously, the biggest thing we'll have to watch now with some of the trade tensions easing. We saw a big move in the dollar here the last couple of days. We'll have to see how that trends. It looks like the dollar's made a turn, and that could, again, just be another limit on that wheat market.
Right. Cattle market, just a little easing today, a little consolidation off the all-time highs here, but we've had this perfect storm. Do you see much downside risk here with the cash market looking still so strong?
Obviously cash market's still going to be king there. In terms of the futures, just feels like this 217 area on the June was a target point I had. The possible spot where this market can get a little bit of, get a little tired, maybe see some correction. I'm not calling for anything in terms of a big break. Maybe take $7-8 out of the market on just a technical move, but then set ourselves up for a second run as long as that demand stays good. Choice carcasses 349 at midday today. That's still out there. We'll see what the cash trade is going to develop because just those cattle numbers aren't there. Packers are still aggressive in the marketplace. So really any pullbacks here are still probably some opportunities to keep a little ownership over any animals that you sold here. But I'm still talking about puts in the long term because there's just so much value on the board here that a producer's got to protect those margins because they could fall away very, very quickly.
Yeah. And not only are we due for a correction, we are overdue for a correction, aren't we?
Yeah, we are. You go look at kind of the runs in terms of what we've had. They're typically around that $20, $18 to $20 level. And then we see some pullback. Right now, that the current run in that June contract is a little bit over that $20 mark. So again, it's an area where it feels like things may be getting a little tired. Wouldn't be shocked that you have a couple days of a pullback just because we can. But that, I think, again, like I said, opens up some opportunities to get length into the marketplace for another run, maybe into the summer months.
And the hog market actually came back today. Oh, just a minute. I'm having a technical thing. And John, the hog market came back, closed pretty decently here today. I don't know if China and what's happened with tariffs is a little bit of a tailwind for that market, but can we get June above the 100-day mark? What's it going to take there?
Yeah, that seems to be the magic number right now is the $100 mark on that June contract. We rallied up there again, failed at that again today. I think we need to break that, and then we see some technical buying in. We're fighting the 100-day moving average and just been seesawing back and forth as really the June contract is flattened out here and just trading a sideways range, looking for some direction. Need a little more cash strength. We're not getting it out of the index. Like see a little more bump in that retail value, and then maybe we get some summer run going on those June hogs. Still like the deferred contracts, though, moving to some new highs on those charts. Good strength in those deferred contracts. Again, as hog numbers are still going to be fairly limited going forward. And, we'll still have to watch the demand with high-priced beef out there. Pork demand will stay fairly strong, and that may be something the market's counting in the longer term.
Yeah. With what's happened with the China tariff news and the recovery that we've seen in the stock market and whatnot, what's the money flow look like? Where does it go now? And what are the funds going to do in the ag space, do you think?
That's going to be an interesting piece of the puzzle in terms of where we are. Realistically, in terms of the global prices, if China's coming in to buy anything here in the short term, it's not going to be soybeans. We're well over value compared to the South American bean supply. The only spot, if there's anything immediately happening, really, in terms of ags, would be corn. They could step in and pick some bushels up there for reserves or wherever they want to put them. There is some dryness concerns we are watching in China, but they kind of kept production levels at record levels as well as imports steady for next year. So we'll have to see how that plays out. I like the thought of what's going on in maybe the livestock market here. They kind of stepped away from the cattle market, even canceled some purchases. We could see them come back into that cattle market, which could provide us another additional boost. But overall, the equity markets are the happiest right now. Another solid move higher. We'll have to see how things trend out here over the next few days, but it sure feels like the S&P and maybe the NASDAQ could be poised to go ahead and challenge those old highs, given some of the positive news on the trade front.
Yeah, no doubt. All right. Thanks so much, John Heinberg with Total Farm Marketing. That is Markets Now.